I've gone through Lemonade's Q2 2022 earnings call several times, and I want to share some of my top highlights from the call. First of all, from Tim, I want to share this comment that their headcount grew only 2% in the last 6 months. Of course, before that, in the 6 months prior to that, they had a ton of growth because year over year they had 52% growth in headcount, but only 2% in the last 6 months. Which this is all lining up with a lot of what they're forecasting and guiding for, and sort of laying out as their strategic plan to really cut costs and become profitable as soon as they can, so they don't have to do another capital raise. And so this is really what we should see, and what I'm going to be trying to model out in my own Lemonade model is that their costs and their expenses are really going to have to drop. If they're at peak losses this upcoming quarter, Q3, and then losses are going to slowly decelerate and decline and then turn to profitability. So really interesting to see that, and that's something I'll be even trying to watch for, is what their headcount is at going forward. Next, we'll jump into Shai's answers of some of the Say questions, and great to see that my question was answered. I asked about the car rollout, specifically when it's going to be in Texas, California, New York, those 3 big states, but also when it will be available, but also what they're expecting for customer count for car. This came through in their letter that they've been going to be fairly cautious with car. Just because it's a newer product, they don't want to roll it out too aggressively, and Shai just reiterated those points here, that they're very excited at the opportunity, but also taking it with humility, taking it with some caution, because again, they don't want to push it out super fast and then maybe have losses larger than they're expecting because they don't have the underwriting tuned in enough yet. Then he goes on to talk about the telematics, and of course telematics is extremely important to their overall thesis of the car product. Car in general is an interesting product because, most insurance products, especially ones Lemonade has, they don't have too much direct feedback, sort of data-driven feedback from the customer. Like, it's not like you're putting a device in your home, and maybe someday they would have something like this, but it's not like you're actually, installing special Lemonade smoke detectors or water detectors or flood detectors in your home that then can predict or tell, different the likelihood of a fire or a flood or things like that, or how cautious you are in your home or not cautious, etc. There's very little insurance products that have that kind of direct data feedback. But what Lemonade's doing with telematics, same kind of idea that Tesla is doing in their insurance product, which almost takes it to an even higher level. But even what Lemonade has in their telematics system is significantly better than what traditional insurance would be doing, just basing their underwriting on proxies only, just because you're getting direct feedback on how careful, how cautious of a driver is this person. And I'm sure that can even carry on into other product lineups. If a person's more conscientious and careful driver, they're probably a more conscientious and careful homeowner, maybe less likely to have a flood or a fire or other insurance claim on their home, etc. So telematics is a really big deal for the car product. And then he talks about, it's interesting that only 4% of the a legacy insurance market they only have about a 4% telematics adoption, but Lemonade has closer to 90%. And he talks about that the big reason for this could be that these legacy insurers, if they really price as accurately as they should, they might be cutting off parts of their book of business, and even parts of their, they might even cut back the number of staff they have to be effective and efficient. They're kind of cannibalizing their business for maybe a better overall good, but the process is probably not a fun process to go through. And in that sense, when you have these sort of internal conflicting interests inside a large corporation or company, it's hard to bring about change. So that's sort of why he's suggesting there's a low rate. I would also wonder and kind of guess that there's also a low adoption rate, even if you had telematics as an option, say at an incumbent insurer. It's maybe a low rate because maybe there's software around it, maybe the whole system or solution from a customer experience point of view is maybe not good, or not. Maybe there's lots of kinks or little issues that are not worked out or not thought through or were not sort of architected for or considered, versus a company like LMND, who has really a mastermind sort of designer in Shai, who's looking at the whole structure, the whole implication of any design change for the customer, all the way back to the staff, all the way back to how the company is run efficiently, effectively. And so because of that, I think they can design a much better, and they do design a much better user experience. The next question comes from Darren, and he asks about at their time of IPO versus now, what's the sort of risk level at for LMND? And they did kind of answer this, just in the call, throughout the call and the earnings letter yesterday, that really the risk has come down, I think, and has substantially off the table. It's why I'm so excited for LMND right now, is just because they just have such a confident tone as they outline and say, we're going to reach profitability and we're going to be reaching that soon, and we don't need to raise money again. A lot of the major risks right there for the company, I think, are off the table. Of course, there's still some risk. Shai goes on and talks about how they have executed so well in their IPO, which is true. Really, their track record of execution, I'd say, is excellent. Go from a monoline business to a multi-line carrier in just 2 years since their IPO, launching 3 products throughout the U.S., pet, life, and car. And of course, more and more products they have and are available to every customer. There's more cross-sells and upsells, which makes them even more efficient to sort of the long-term strategy. But there is still risk, of course, with a company like this, and as they have grown to the size they're at, it's kind of like you're steering a bigger ship instead of a smaller ship. And there is still, risk that something could go wrong. This was a nice line here, but by all measures, we are significantly de-risked, but we don't for a second believe we have delivered on our potential and believe we have decades of growth potential ahead of us. And that's the thing. That's what I keep banging the drum about. The upside on LMND, if they're successful, the upside is just way bigger than people realize. That's my point. The upside on LMND, if successful, say it's a binary outcome, they fail or they succeed, the upside is just way bigger than people realize, because I'm modeling out to 2035. I'm getting into, $200 billion, $300 billion range in my model, but that's just 2035, and they could grow much larger than that potentially. Finally, I want to touch on Tim's comments around how they just have such a huge variation across customers in their platform in premium per customer. So you could have a customer, you could have an average of $300 of premium per customer, but you might have some customers that are already paying $3,000 in premium per customer. And of course, you're going to have some to balance that out. They're maybe only paying $60, $70, $80 a year in premium, maybe as a renter. And renter's insurer. And he goes on, like, in theory, even this $3,000 per year customer gets older, they could really even turn into a $10,000 per year in premium customer if they're wealthier and older and they have bigger houses or multiple houses and more cars and multiple cars. Is totally doable. I'm sure will happen for many of their customers. But this is kind of the part of their long-term strategy, is that these customers, you delight them. You find these gem customers that maybe through driving habits, through other information and little data signals they're tracking, that this is a great customer that you really want to keep. And so you can actually give them more competitive pricing, better pricing, maybe than the rest of the market could even give for all their products, and you keep them around and they turn into a $3,000 per year customer, or even a $5,000, $10,000 per year customer. There's just huge implications if you can delight customers and keep them satisfied over the long haul. Lastly, I just want to mention that I will be updating my LMND projection model probably this week, maybe Friday. We'll have a video if I have time. We'll see. But if you do want to join my Patreon and get full access to this spreadsheet model, feel free to do so and support the channel. Either way, thank you so much for watching. And remember, it's in the bag.